Let's ask Lauren Goodwin of New York Life Investments here at Post 9. Nice to see you. I mean, that's what some people are talking about, that we're setting up for a run into the end of the year. Do you buy it or no?
I think that we'll see some upside in equity towards the end of the year. But the challenge for investors is that when you're in this late cycle environment where market narratives are shifting back and forth, it's difficult to get meaningful sector or even style performance for more than a couple of days at a time. And so I expect that we'll continue to see, frankly, what we've been seeing over the past few weeks, which is a range-bound and volatile market, but one in which you have to stay invested because we have not reached a recession or a bear market yet.
What if rates continue to move lower? I mean, that's what this is largely about, right? This rate relief, if you want to call it that, yields coming down and stocks going up.
Well, if rates continue to move lower, I think that will be the primary driver of a reasonable rebound in the equity market. What I'm looking for to determine whether that's viable are a couple of things. First, of course, what we're hearing out of the Fed is important. Of course, the CPI data that we're going to get this Thursday are important. But when it comes to market-driven rates, it's also about supply and demand dynamics. These past couple of days, we've had a little bit of relief from Fed narratives and also a little bit of risk mitigating type of buying. But Treasury supply is still overwhelming. We expect it to remain that way. And so the term premium aspect of long-term Treasury yields, very much at play.
So did you say whether it's viable or buyable? Because you could look at it both ways, right? And I was like, which one did I hear? Because I hear you saying, okay, with viable, is it really lasting? Is it going to, are they coming down and going to stay down because of all the issues that everybody's been talking about, supply, who the buyers are? Or is it buyable if you believe that rates are going to continue to go down, therefore you should play for a year-end move in stocks?
Okay, so when it comes to buying into duration, which we're hearing a lot of institutional investors eager to do at yields where they've been, especially in the 10-year and further out in the curve, I'm hesitant to make aggressive moves in duration because when rates are moving around because of the term premium, as opposed to meaningful changes in inflation or rates expectations, that leads to more volatile long end of the curve. And so it's just not my favorite place to add risk early. But when it comes to the equity market, I do expect that it can be a boon on a given day like today.
I mean, look, Fed speakers have been coming out almost one after the other. And I mentioned at the top of our show, in about 27 minutes or so, we expect remarks from Minneapolis Fed Pres Neil Kashkari. We'll have the highlights of that. But one after the other, they're coming out and looking at the action in the bond market over the last month and saying, you know what, financial conditions have tightened considerably. We may not have to do anything else. What does that mean?
The tricky thing is with that line of discourse is that by saying that, financial conditions today have eased. Right. And so you're
slightly.
Slightly.
I mean, they were up a lot in September rates.
But relative to where monetary and bank lending conditions are, financial conditions are still relatively sanguine. And so I think what the Fed is dealing with is an environment where the data has been stronger than expected, since 12 out of 19 of them said in September that they would expect another rate hike later this year. But financial conditions, to your point, have been tightening. I do think that if we continue to see financial conditions tighten, and that's not what we're seeing today, right? So if we continue to see financial conditions tighten as they have been, then that could be a reason for the Fed to say we can pause another month or even pause for good.